on Australia's business channel. This is Media Week.
Hello, welcome to the program. Ahead, explosive claims against Win TV billionaire Bruce Gordon aired in a court battle with a former senior executive. Let the sports rights battles begin, and Adam Boland's plans for Ten's breakfast and morning shows. But first, it's been 3 years since the biggest change to outdoor ad measurement was launched, and the latest data from the MOVE system showed 9% growth in audiences in 2012. It's also nearly a year since APN entered a joint venture with Quadrant Private Equity for its outdoor business. Well, for more on all of this and what sort of targets the sector has for share of total media ad spend, we're joined today by the CEO of APN Outdoor, Richard Herring, and our co-host James Manning, editor and publisher of Mediaweek. Richard, thanks so much for coming in. Look, firstly, we've got to ask you, because it's no secret about the boardroom battles that we've been seeing at APN News and Media, obviously still looking for a new CEO, trying to reduce debt, the share price. How has this impacted APN Outdoor, or are you sort of insulated given the JV with Quadrant?
I wouldn't say totally insulated, but we're sort of obviously aware of what's going on there. But look, we very much run our own game, and it hasn't impacted our business at all, to be honest. We've been very insulated from that point of view.
And tell us, has the business changed much since the JV partners became involved? Because you've sort of got a board made up of reps from both companies. Yeah,
that's right. Look, it's actually been a great thing. It was almost a year ago, as you said. And I think what it's done for us is we still retain that media APN operator involvement in the board and the company, and also have these people from different backgrounds, more investment backgrounds, who bring a different skill base and diversity to the business, which I've actually really enjoyed. It's been very good.
Recently as well, we've seen the General Manager of Sales, Phil Eastwood, left, and the sales role absorbed into the CEO's responsibilities. What was behind that decision?
Oh, look, I think we're always looking at different structures for the business, and I think there's a time, Phil obviously felt that it was time to move on as well, and we're just trying to make ourselves more efficient and make sure we deal with advertising in the best possible way, and restructuring is just one of those things that we often look at, and that was a part of that restructure.
So talk to us a little bit about those MOVE audience figures.
Yeah.
The top line result was audiences up, I think, around about 9% roughly since you last reported the size. Yeah,
no, it was a great increase. I think we always knew it was going to increase, but certainly the 9% was probably on the upside of the surprise. And look, I think it's it probably vindicates what we've been saying about outdoor with the growing audience, whereas most other media are finding it difficult to retain their audiences, certainly with different pressures on them. So a very positive story for us, and for our advertisers probably even more importantly. So
it's a difficult thing to update, I guess, because it's such a big beast to sort of measure. How often can you do that?
Oh, look, we do it probably once a year. We have done them once a year in a minor way, but this year we had the 2011 census data that was released in 2012. And other travel information that we included, so we had enough different news sources of information to update the whole thing. So it was a very good outcome.
And in terms of the revenue growth there, that sort of 2% in 2012, which is pretty amazing considering what was going on last year. Where was the growth in particular?
It was pretty much across the board. Right. It wasn't any one particular format or another. So it was very, very much spread. And there are fluctuations from month to month and year to year, from format to format, but it was very evenly spread. And again, a great result, 1.8% for the year, compared to probably other media who are probably struggling more than that. So again, we're very pleased with that outcome in the revenue last year.
The market conditions to date this year, I mean, are you on track to maybe push those figures a bit higher, do you think?
Yeah, look, I think the first quarter will probably show around about 3% growth in outdoor, and I'm not familiar with what the other media are running at, but again, that seems to be a pretty good number in the first quarter. It's a long year though. We're only hitting Easter now, so there's a lot to play out, and I think there's still elements of uncertainty about markets going forward too. So we're keeping our forecasts rather short term rather than sort of looking too far out.
So there's no figure at all out for your outlook for the rest of the year?
I don't think I'd want to jump on a figure right now, no.
Come on, so give us the number.
But any sense of a shift in sentiment coming, or?
Oh, look, I think there's signs of it. Whether it can be maintained or not is the key thing, and whether advertisers actually get uplifts from that advertising spend that they make and can reinvest, I think is going to be the bit of the telltale. And there's political, obviously the election and things like that, which plays in different ways for certain advertisers. So you know, it is. There's a lot of moving parts, is the way I describe it.
The election a good or bad thing from your point of view, though?
Well, traditionally it's not been a strong thing for the outdoor industry, although in some countries it's very strong. It's a great form of messaging. So, and with the impact of digital signs and things being able to change them regularly, we're hoping to get more of an uplift from the political parties over that time. So, fingers are crossed.
But they don't really use the medium as a vote for me thing at the.
Oh, they have done in the past. Probably not as much as they've used television, I think, and some of the other primary medias as well. But you know, we think we've got a role to play, and certainly our task is to convince those to use it in a major way for this election as well.
A lot of market consolidation last year, or a couple of major parties getting together. I guess Media taking over I.
Yeah.
You were one that you sort of had a look at I in the early bidding process,
yeah.
I think. Will that settle down now? Do you think there's any more to come? Big people maybe swallowing small
I wouldn't
players?
say that was the only thing that's going to happen, but you know, there's a lot of different issues at stake there as well. It's certainly settled down for the moment, but that's today.
It's companies, it's mainly small regional players that are left, I guess, is it? Most of the big companies are aligned pretty much?
Yeah, there are. There's obviously the major four companies, but and then apart from that, there are smaller, more state-based players. And specialists, so those smaller opportunities are fewer and far between though.
Just wanted to ask you too about some of the initiatives you've been doing and the use of the hoopla surrounding Ellen's visit to Australia. And I think we've got an image just depicting what you did and you know, obviously the future of digital and outdoor. Yeah. And it sort of just shows someone there with their mobile phone zooming in on a billboard there, and so this was, they were able to connect with Twitter directly then through looking at that.
It's a very exciting part of outdoor, which is probably the oldest media in some ways, to think that we're actually embracing new technology in the way we are. And I think that's just one example in a certain environment of the great use of digital, which is not only instantaneous messages you can put up, but also the interactive nature of it as well. So probably it was a good example of the opportunity going forward, and obviously that wasn't necessarily an advertiser-based execution, but advertisers are embracing it, you know, incredibly well, and I think that the opportunity going forward is very, very strong for everyone.
It's a big investment, transferring sites to digital. What's the sort of, has the state of the market been sort of holding that back a bit with, you know, if there's less certainty about the future, have you got to be careful where you put those digital upgrades? Look,
I think that's right. I think it probably has held back. I think there's one of the major issues with digital is in fact getting the regulatory authorities to allow it. Certainly in outdoor environments, not necessarily indoor environments. Has that been a hard thing here to look, it's been difficult, but you know, we understand why, and we actually work really well with all those authorities, the road authorities, the councils, the governments. And my direct experience is when you sit down and talk them through what it actually is and what it isn't, they all nod their head and go, I understand now, and they're far less threatened by it. So it's, you know, we've made some great inroads in the last 12 months, certainly.
Is there any particular sector, do you think, that might be more attracted to a digital site when you're looking at advertising?
Yeah, there are, and I think it's not necessarily sectors but certain advertisers, and I think, you know, one thing that we want to make sure we achieve in digital is not just to have a redistribution of existing money in outdoor, we want to make sure we get new money into outdoor. So it's those advertisers who traditionally may not have used outdoor because it was not flexible, i.e. it was up for a month and it took a while to get it up there, who want to get a message up there this afternoon or change it 3 or 4 times a day or day part, you know, whatever it might be. So that opportunity we're very sure about, you know, pushing down to make sure we get the most out of the digital investment, because it is a lot of money, you're right.
And those digital, the regulatory hurdles there, so the digital offers changing static images as opposed to rolling video and stuff like that.
Yeah, I think that's it. Yeah, I think the word digital spooks a lot of people because they're sort of thinking, you know, 3D sound.
Someone a bit distracted driving down the road by a moving image or something.
And when you, as I say, when you sit down in front of people and say it's a slideshow, it's a PowerPoint slideshow, or it's no different to the old Trivisions, which you know the three-faced. And they go, right, and it's so you can see the spark going off in their mind that they're less threatened, as I say. So, you know, we're certainly making good inroads there.
Just finally wanted to ask you too, I think the outdoor share of total media spend is about 5%. at the moment. What are your sort of targets for growing that, particularly given, you know, Move now and also with the growth of digital sites?
Yeah, look, we'd like to get to about 6% in the relative short term. Our main goal is really on an annual basis, which is to outperform other main media. And, you know, I think you just talked about 2012. You know, we've done that quite consistently, and that's obviously chipping away at our share. So I think we just need to continue to push down that, and if we get to 6%, it'd be a great result. But, you know, we've got to focus on the short term more than look at those goals too far out.
Richard, thank you so much for joining us today.
Pleasure.
Richard Herrington, CEO of APN Outdoor. All right, time now for a check on the media sector's performance on the share market over the first quarter of 2013. Here's Evan Lucas from IG.
Media this week has been a lot more tepid than obviously what we saw last week after such a tumultuous week up in Canberra. We obviously saw the media laws being thrown out completely, and it did throw the stocks into a bit of disarray. This week, however, it is a little bit quieter, and for that reason, considering it's the end of the quarter for the calendar year of FY13, I think it's a good idea to review where we're currently at with the media sector. It is one of the best performing sectors around. So if we drill down into the 5 main stocks, we have a look. News Corp itself, it's up 18.6% for the quarter. It's added about $4.58. It's currently trading about $29.80. Reasons for it, obviously, we're seeing really, really good improvements over in their US division. They're also improving in the sports area with the fact that Fox is taking over further. And that's driven the stock further in this quarter. The next one to already talk about is obviously Seven West Media. It's also a very strong performer. It's up 27.4% for the quarter. It's added about 45 cents, currently trading at $2.08. Look, main reason for it is that brokers see it as pretty cheap on fundamental valuations, and it has hurt the stock further forward. It's obviously, with regards to Seven, probably the best in terms of eyes on screens, and also helping it move up a little bit higher as well. Major player of the quarter, no doubt about it, has got to be Southern Cross. Southern Cross obviously probably would have been even higher again if the Nine deal wasn't thrown into disarray last Thursday. It's up 47.6% for the year. It's really the standout performer there. Their earnings when they came out in February were very, very strong. They have solid screens. Their eyes on screens again is very, very solid there as well, and that's why Southern Cross is the standout in the media sector and up that 47%. 10 is the worst performer out of this stock. There's obvious reasons why that. They're still under pressure with advertising costs. They've also had another CEO installed, 5th one in 2.5 years. However, in saying that, brokers have upgraded their calls on 10. They're actually up about 14.5% for the quarter. They're currently trading at 33 cents, but it is the worst performing stock in the media sector. Finally, moving to Fairfax, obviously the only real major print stock there. It too is up slightly. It's up around about 24% for the month, adding 12 cents at 63 cents. Reason for it, it is coming from a low base. Investors are starting to see that Fairfax is finally moving into the digital age with their online business. The Age and the Sydney Morning Herald continue to sort of move in towards that tabloid space with the fact that they've now changed their print media as well, and it's probably why you've seen Fairfax jump up that 24.5% for the month. All in all, the media space has been a fairly good performer, and for the quarter, they should be well and truly proud of where they're at.
Coming up on Media Week, the legal battle between Wynn's billionaire owner and a former senior executive.